that homes for sale are just sitting on the market longer.
Say home builders are offering to sell homes in bulk at discount to investors.
And that additional supply is putting an end to all those bidding wars.
Home prices are falling. Over the past few months, we have been experiencing month-by-month declines in home values caused by higher interest rates and an overall fear of the current state of the economy. Now, these falling home prices are nowhere near where normal home prices should be, but the writing is on the wall for these major markets. In today's video, we're going to talk about which markets are going to experience the biggest drop in home prices. This will help some of you all buy or sell in these particular areas, or either invest in houses in these areas where home prices are falling. Now, before I go on, hit that subscribe button and like this video. To start off with, it has been reported that we are going to experience home prices fall between 25 and 30%. That is nowhere near the 40% increase we experienced over the past 2 years. So even if home values do decrease, it's still not going to be at normal level. Home values are still going to be overvalued, and it may still be difficult for regular buyers to purchase a home. So how did we get into this situation? Well, to summarize everything, when the pandemic first started, the Fed decided to lower interest rate in order for us not to go into a recession, or even worse, a depression. So in lowering interest rates, the Fed wanted to stimulate the economy, and that increased the buying power for its citizens. And with mortgage rates at new time lows, people were able to go out there and buy houses. But something negative happened as a result of that. Because everyone was a buyer and everyone was able to get a lower mortgage rate, there were more buyers than the amount of houses being sold. So that quickly inflated home prices, and people started having bidding wars for their houses. So that jacked up home prices because people were paying well over asking price for homes. And so because of that, that lowered the pool of buyers. And now only a select few of people could buy houses. And so there became a bigger affordability issue with buying houses, because yes, mortgage rates were lower, but at the same time, home prices were mad expensive. And now today, over 2 years later, the Fed wants to do the opposite of what they did 2 years ago. They want to decrease home prices and increase interest rates. And in doing so, that will decrease home prices, right? In today's video, we're going to explore which markets are going to experience the biggest cool-offs. Now, one of the main reasons the Fed wants to do this is to get rid of inflation and also make it affordable for an average Joe to buy a property. And as I stated before, yes, home prices can fall by 30%, but interest rates are high. And so your monthly payment may still be around the same amount. And so they're not really addressing the affordability issue. They're just trying to get rid of inflation so they can look good as an economy to other countries. And even if home prices do fall in 30%, especially in certain areas that I'm going to explore more in this video, the people they're trying to help with lower prices probably still can't qualify for certain mortgages because of the interest rates. And then home values are still not going to be at the normal level where it used to be pre-pandemic. Now, the top 10 areas that we're going to explore in this video, these are areas that experienced the biggest boom during the pandemic. And so now, over the past few years, these same areas are experiencing the biggest home price loss around the country. And we know this is happening because it was reported that during the last week of September, mortgage purchase applications fell by 13%. That was an almost 12% increase in loss compared to the week previously. And this 13% decline, of course, coincides with the higher interest rate that the Fed recently announced. And so you have a lot of mortgage rates close to 7% or even over 7%. Now, to talk about the areas that are going to be the most impacted, Moody Analytics created this map to show the most overvalued and undervalued areas in the United States. Now, I'm going to tell you all in this video, list by list, every city that's going to experience the biggest cool-offs, but I think this map is great to show what is to come in the economy. As you can see, there are a ton of black areas representing overvalued areas where a lot of analysts believe will experience the most dramatic decreases in home prices. And now compare that to the same sort of map they made back in 2019. What a stark difference. You hardly see any black spots representing inflated home prices. So looking at the overvalued or undervalued areas in 2022, you could see these black spots like in Arizona. If I go up here, you see a spot in Salt Lake City, Utah. You see a ton of black spots in Florida. A lot of them are actually in the South. It's surprising because usually the South stays at bay during these market declines. You have them up north. I see some in Michigan, and you have like a lot of them in this like Colorado area. You have one in Wyoming and South Dakota. And then compare that to the 2019 map. There was only 3 spots, and the 3 spots were one in Texas, one in Idaho, and one in Washington. Now, talking about these areas, when the pandemic first hit with lower mortgage rates, people are looking for properties with a spare bedroom they could use as a home office. They were also looking for cities that were up and coming, had a lower cost of living, and had a lively social life, either like a place with a lot of outdoor activities or where a lot of big businesses were coming into. So this takes us to the top 3 places where the biggest drops in price are going to come. The top 3 places are Boise, Idaho, Austin, Texas, and Phoenix, Arizona. As you can see, these are not your big time cities like a New York City or Los Angeles, California. These are cities that are mid-tier where people are looking to raise a family in. People are looking for outdoor activities. People are looking for a lower cost of living. Another big thing about these cities is that a lot of Fortune 500 companies moved into these cities. For example, Texas saw an influx of new companies coming into the city. And with these big companies come an increase in population, an increase of employees working at these companies. And these people are looking for places to live. And so these people are buying a bunch of houses. They're using these salaries that they got from California, from New York, and they're outbidding the regular residents in these cities and inflating home prices. But now the decline is happening. In Austin, Texas, home values fell 7.4% between the months of May and August. In Boise, Idaho, during that same period, that was 5.3% decline, and in Phoenix, Arizona, that was a 4.4% decline. Financial technology company Smart Asset named Boise, Idaho as the #1 market where most of the cooling of the real estate market will happen. Smart Asset looked at different metrics in order to determine which markets had the biggest drops, and they collected a list of 10 markets. And one of the metrics they looked at was how many days on market homes sat in, and then also the number of houses listed versus the number of houses sold. Boise, Idaho is experiencing an over 186% increase in days on market compared to last year. Now, these are the top 10 markets that they determine will experience the biggest cool-offs. So #1, we have Boise, Idaho that we talked about. #2, we have Austin, Texas, just that whole area around it. We have Phoenix, Arizona, so that includes Phoenix, Mesa, and Chandler. #4, we have San Jose, California, so that includes Santa Carla and Sunnyvale. And then #5, we have Las Vegas, Henderson, Paradise, Nevada. #6, we have Salt Lake City, Utah. #7, we have Northport, Sarasota, Bradenton, Florida. #8, we go back to California in the San Diego area. #9, we're back in Utah again, but this is the Provo area. And then #10, we have California once again in Stockton, California. So what does this mean for people living in these areas or people trying to move into these areas? Well, #1, it's probably not the best time to get a home equity line of credit or even refinance your house right now, because with home prices decreasing and plus interest rates are increasing, it doesn't make any sense to take a loan out of the equity of your house because first of all, you may not even be qualified for a good of amount of credit, and then second off, interest rates are super super high. But this may be a decent time for people looking to move into these cities to buy a house. Let's say during the pandemic, you've seen these prices increase in Boise, Idaho, and you always wanted to move to Boise, Idaho. Well, in about a year or two, they're probably going to have price declines around 30%, which may be a prime opportunity for someone to buy. I believe investors can use this time also to invest in different properties and to put in decent offers in order to invest in a property in a specific area. And now sellers are being more receptive to what a buyer wants. And so it's not like the Wild Wild West earlier this year where you had to waive every contingency, you had to waive inspections and appraisal and just pay in cash for a property. Now you can have an inspection, you can have an appraisal, you can put in a lower than asking offer on a specific property. And I believe now is the time to make that low offer. I believe if you're not slightly embarrassed with your offer, you're not making a good enough offer during these times. Don't be afraid. If a house is listed for $300,000 and you still think it's a little bit overvalued, you'd be surprised how low a seller may go in today's market. Offer 20 to 30% less and see what happens. I recently met with an investor who did this very thing and stuck to his guns. And the realtors just always came back saying, I don't know. I don't know if the market is completely cooled off yet. I think you may have to go higher with your price. But he stuck with his gun and they ended up selling the property to this specific investor. And so for any other investor or buyer out there, stick to your price. Don't try to go higher. Don't let the realtor on the selling side try to convince you that, these house prices are going to stay the same. They're not going to go that low and other things like that. No, stick to your offer, make a low offer, make it kind of slightly embarrassing, but not too embarrassing, and just make a good offer. You cannot be playing with these high interest rates. Now, let me know down below, what do you think of these biggest declines in these specific areas? One of you all living in these areas, what have you been experiencing over the past 2 years? I would like to know down below.